those listening who aren't happy with where you're at, there are ways to change that. Many in the middle class stay in roles, jobs, in a type of lifestyle that they don't enjoy until they're 62, 65, and then they retire and they die a few years later. That isn't the life that has to be lived. There is this freedom that waits on the other side of you saying yes to an asset like real estate. Is real estate the only way to get there? Absolutely not. But it is a proven way. I think the root of everybody's desire when they get interested in real estate or they get interested in another asset is freedom. Everybody words it differently, but everybody is looking for freedom. You guys have found it through real estate. I found it through real estate. A lot of people have found it through real estate. It works. That's the only thing I know to say is it works.
It works. You just gotta take action. And I think that's when people stop. They can kind of dream about it, but then the minute you have to take action, the minute you have to maybe not turn on TV at night and analyze a deal, that's when it stops, unfortunately.
What's up, guys? Real quick, if you haven't joined my free Facebook group, Residential Real Estate with Jaron Sustar, yet, you need to scroll down to the show notes of this episode. Click the link to the Facebook group. It's completely free. Fantastic place to network and collaborate with other residential real estate investors all across the country so that you can continue to grow your real estate portfolio. Katie, what's up? I'm glad to have you today on the show.
Yeah. Hey, Jaron. Thanks for having me.
Yeah, this is going to be a lot of fun. I'm with Katie Bargetto, like bougie, not Bargetto. Not on.
Not Bargetto. Hopefully we're not ghetto.
No. The Jetto. It sounds it's super elegant. No, okay. Yeah, makes sense. That is awesome. So you probably got people in the mafia. So got to make sure we
probably.
Your good side. No, I'm joking. Anyways, I'm stoked to have you on the show today. You got 26 doors, single family, multifamily, short-term rentals, and then you've been big into syndications. You have a really cool story. Your husband was a firefighter, maybe still is. You were in the corporate world for, I think, 13 years in the aerospace sector, and then you guys discovered real estate. And it's interesting how when people discover real estate and go after it with everything they have, it tends to change their life in a positive way. So I want to get into all the real estate nuances and the nitty gritty, but tell us a little bit about you guys, your family, how you got to where you are today outside of the real estate world.
So like you said, my husband was a firefighter. So he did that for 15 years, retired out of that. I was in corporate for 13 years. We're in Phoenix. We got 2 young kids, 1 more on the way. And we found real estate kind of by happenstance, I think. You know, we were kind of original Airbnb-er house hackers, I like to say. In 2012, when we started dating, we were living in Newport Beach on the Balboa Peninsula, and we were renting our place. And my husband, Mike, heard about this Airbnb world. This was at the time when it was not common knowledge.
Yeah.
And so we started Airbnb-ing one of the spare bedrooms in our rental. Wow. So it was like original house hacking, original Airbnb-ers. And
this was 2012?
This was 2012. So we met in 2011. 2012, we were doing this. Yeah.
Wow. Yeah, because I thought Airbnb started in like 2009 or so. Maybe it was a few years before that, but it is not well known at the time.
No, nobody, not a single person knew the word Airbnb. Obviously, all of our friends thought we were crazy. You know, like, you have strangers living in your house with you. Like, what? It was mind blowing to them. But yeah, that was kind of what gave us the bug. And then we kind of continued from there. Then we ended up buying a condo in Newport Beach. And we continued to house hack. So we had 2 Airbnb listings. We rented our whole house and we rented the spare room. When the whole house was booked, since my husband was a fireman, he was gone in the state of California. So he would be gone for weeks at a time. And so I would then either go stay at a girlfriend's house in LA while our whole house was rented, or I would rent a room on Airbnb from someone else to rent our whole house.
You got to be kidding me. This is awesome.
So we were crazy. I mean, it sounds kind of crazy now, but it was just like, yeah, it just felt so normal. Like we're bringing in a bunch of side money. This is great.
It sounds
So,
crazy. It's like the old Dave Ramsey saying, live like no one else today so you can live like no one else later. And you guys paid a price, quote unquote. Yeah, I'm sure you guys thought it was an adventure. You probably had a blast with it, but you were probably what most would say is a little bit uncomfortable. It's a
yeah.
lot more comfortable to be in your own home, nobody messing with you. But you guys were saying, no, we know what paying now will do for us later. And most people won't do that. It's very interesting. They will not make the sacrifice, which is not even, in my opinion, that big of a sacrifice now to get them ahead quicker in life. And I think it's cool to look now. I would say that probably gave you guys a pretty big jump start.
Oh, 100%. 100%. And, and that really gave us the bug. And at that same time, we were both, we hadn't branched into like, we want to become real estate investors. Like that's what we want to do. But we were both just kind of analyzing life and not loving what we were doing. Like I had great jobs. I loved both of the main companies I worked for. I worked for Boeing and I worked for Driscoll's, which is agriculture. Amazing jobs, amazing company, amazing people. But there was just things that felt so weird. And they were small things like I'm a dancer and I love to go take class.
Mm-hmm.
And I'm not a night owl. So I hate taking class at night. And I always thought like I'd love to take like a Wednesday morning ballet class.
Yeah.
But it just seemed impossible. Like thinking about it, it was like, when can I do that? I guess when I retire, I can start to take a Wednesday morning ballet class. It was things like that was made us think, I don't think this is really the life we want to be living. And then the same with Mike, being in the fire service, just being gone for weeks at a time. We didn't have kids at that point, but we knew we wanted kids. And so it was just thinking, what does this life look like? Am I a single mom for, 3 weeks at a time? We could never plan vacations because we never knew when Mike was going to be dispatched to a fire. So it was just us realizing we want to live a different life. How can we get there? And we had kind of discovered we had been open to this world of real estate. And then it was like, this is the answer. Like, let's go all in. And then that's when we just kind of really accelerated.
Wow. It sounds like you guys got tired of living life on somebody else's terms.
Yes.
And so many people are there in life, but they never do anything about it. But for those listening who aren't happy with where you're at, there are ways to change that. Unfortunately, I believe many in the middle class stay in roles in roles in jobs in a type of lifestyle that they don't enjoy until they're 62, 65, and then they retire and they die a few years later. And they live to get to Friday evening, Saturday, Sunday, and by Sunday night, they're mad they got to go to work again Monday.
Yeah.
And that isn't the life that has to be lived. There is this freedom that waits on the other side of you saying yes to an asset like real estate. Is real estate the only way to get there? Absolutely not. But it is a proven way that there's very little speculation. We can look for centuries just been making people wealthy. Like go back as far as you want. The people who bought land and property and buildings and held on to them tend to change their family tree.
Oh,
Now,
yeah.
somewhere down the line in the family trees, some spoiled brats end up screwing it up a lot of the times. So that's a whole different subject. But I think it's cool that you guys, it's like you said, you're like, I want to go to dance class on Wednesday. Like how do you do that if you're living on somebody else's schedule? And I think the root of everybody's desire when they get interested in real estate or they get interested in another asset is freedom. Everybody words it differently, but everybody is looking for freedom. And you guys have found it through real estate. I found it through real estate. A lot of people have found it through real estate, and it works. That's the only thing I know to say is it works.
It works. You just gotta take action. And I think that's when people stop. They can kind of dream about it, but then the minute you have to take action, the minute you have to maybe not turn on TV at night and analyze a deal, that's when it stops, unfortunately. But it's one of those things where if you can just take continual action, even really small steps, in a year, in 2 years, in 5 years, you're in a completely different place.
100%. So what does that what did that journey look like for you guys? So you started with the house hacking,
Yep.
great way to get in, and you learned so much. But eventually, you're like, okay, like it's hard to like you can only scale so much when you house hack, or you can only scale at a certain pace. So obviously, you guys, I'm sure, wanted to add more. What'd that look like for y'all?
So we've kind of dabbled in a lot of different types of real estate, which is cool. We've learned a ton. But so we started with the house hacking, Airbnb. Then we bought our first rental out of state, so Charleston, South Carolina.
Nice. We're at in Charleston. I went to college there.
Oh God, I don't even. We sold it, unfortunately. One of those that I wish we hadn't sold.
Hold on to that one. That's
Yeah,
funny.
I know. It's one of the ones we wish we had held on to. So we self managed it, and that was hard. We bought that in 2015, and it was hard. It was hard. It was new. We self managed. We had kind of dramatic tenants. It was out of state. We're in California, South Carolina, time zones. Mike was kind of the main point of contact, and he would be unavailable. I remember one time there was like a huge plumbing issue, and our tenant couldn't get a hold of Mike because he was literally fighting a fire out of service. And so, of course, like 2 days later, she's pissed, rightly so, right? But it was hard. It was just a very eye-opening experience. And so we actually didn't accelerate for a while. So we bought that in 2015. In 2018 is when we really took off. I think your story is kind of the same.
Almost the same. It's freaking me out because it's very.
It's crazy. Yeah. So in 2017, we had one rental. By 2019, we were up to 27. And then 2 years later, 38. And then recently we've sold off a couple and we've moved that money into syndications just for a more passive portfolio. But yeah, that's kind of it's typically been out of state single family houses. We do have a multi-family unit in Columbia, South Carolina. And then we have some medium term rentals in Ohio. And then the rest of our portfolio is single family houses in Ohio and St. Louis. And so that's our main portfolio right now. And then, like I said, we learned about syndications, a couple of years ago. And for us, that was just a really nice addition to our portfolio. We both left our corporate jobs and started our own business, a life insurance business, which we loved. And we have this whiteboard in our office. And what we were realizing is our whiteboard was just filled up with all of our real estate tasks. Even though we don't self-manage the properties, they still take time. And so we had this whiteboard and it was like, look at the roof on, Campion and make sure the bed bug problem is getting fixed here and see if this eviction is done. And it was like, wait, we're spending so much time on our real estate portfolio and we want to be building this new business that we're so passionate about. Let's minimize a little bit of our real estate, actively turn that into more passive real estate with investing in syndications and free up some time. So we love that model of kind of having your own hard assets, right? There's nothing better than that. That's going to do so good for you no matter what. But then combining it with investing in syndications has been a really nice mix for us.
Yeah, I think it's a great way to diversify in your portfolio, like within real estate itself. I did the same thing. I think everybody should start buying their own properties. That's just my view on it. Especially, I love the single family home residential space. Build a strong portfolio there, and then use that and just launch into something else as you grow. And that's part of what we've done is I've become LP, a limited partner in syndications and funds, just to diversify. And it's a fantastic way to go. But I want to take us back a little bit because you mentioned your story, which is eerily similar to mine. We flipped the home in 2015, 2016, sometime in that world. And then we didn't really start going all in again until 2018. And we bought a couple in 2018 and really scaled in 2019. You kind of did the same thing. You got this property in Charleston from 2015. And then by, what'd you say, 2019, you guys had got up to 26 properties or 27 properties. So I know when you said that, all of our listeners are like, I don't care what else she has to say right now. How do you do that? And so take us on that journey of how does somebody go? I tell mine all the time, right? But everybody has a different journey. And so how did you go from nothing or 1 to 27 in a matter of really what, a year and a half when you went
Yep.
all in?
Year and a half. So how we did that was our mindset at that time totally shifted, and we really grasped the power of cash flow versus net worth. So of course we were kind of raised and ingrained that net worth is the only number that matters. Like work really hard to build this net worth number and then you can retire. So of course, Mike had his fire pension. I was maxing out my 401ks like a good little girl. And that was what we were doing. Once we really started diving in and learning about real estate, obviously this idea of cash flow is so prevalent. And it's so different from this mindset of net worth accumulation. And so we realized we have money sitting in all of these buckets. Mike's pension, my 401k, I had an IRA, I had a savings account that was growing really big. And so we thought, if we really do want to change our lives in a way where cash flow is what our main metric is, then we need to figure out how to consolidate all of this capital we have and deploy it into assets that can bring home cash flow, i.e. real estate.
Yeah.
And so that's really what we did. I did something that, again, everyone thinks I'm crazy. When I left Boeing and moved to Driscoll's for my job, I did not roll my 401k over. I cashed it out. I paid the penalties. I paid the tax. Everyone said I was crazy, but it was the best decision I've ever made.
Yeah.
So cashed out all of that. We discovered a unique strategy using whole life insurance as the storage place for your money and then tapping that. So that was really helpful for us as we consolidated.
I'd love to hear about that. Like, can you go in detail on that? Like, how did you leverage that whole life to start buying?
Yeah. So we set it up. I mean, you need to have a unique design when you set it up that maximizes that cash value piece of it. And it's essentially just a savings account on steroids and your personal line of credit. So we consolidated this money, and instead of having it sit in a bank while we deployed it into real estate, we had it sit in our whole life policy where it could, grow at 4 to 5%. We have all the other benefits, protection, death benefit, all of that. And then you leverage the policy. And so the way you leverage it is essentially like a line of credit. So instead of debiting your own cash value, you're using your cash value as collateral, and you're taking a loan from the life insurance company. Now there's no underwriting or anything because your policy is collateral. And so if you were to pass away, and you hadn't repaid the loans, they would just subtract that from the death benefit before paying that out.
Gotcha.
So you leverage the policy that way by essentially using that line of credit to go buy real estate. And then, you can pay it off whenever you want. It's, there's no payback schedule. You don't have to pay it back, although obviously you should. And so that was really how we felt good, consolidating money, putting it in a vehicle that's not an investment, but an asset, and then leveraging that to go buy our real estate.
Buy your first or next real estate deal in the next 90 days, guaranteed, or we'll continue coaching you until you do. That's my guarantee if you join my rental academy. I've stumbled upon a process that is so powerful that I can sit here today and say, you can come into my world and buy your first deal in the first 90 days. And if you don't, I'm going to keep coaching you until you do. What we've done in the Rental Academy is we've removed all the roadblocks for you. I've already chosen the market for you. You're going to have leads generated automatically. Myself and my team's going to work with you to analyze those leads. When you pull the trigger on a property that you want to buy and you need to fund it, we've got lenders in place. And after you've closed on it, if you need to rehab it, great. We've got contractors in place. And if you want to keep it as a rental, we've got property managers in place. So you come into our world, we plug you into a proven system, make it easy for you so you can have success in your real estate investing journey. If you're interested, you can go to cowboysacademy.com, or if you go down to the show notes of this episode, click the link that says Cowboys Rental Academy, and it will take you to your next steps there. If you've been struggling finding good real estate deals, I've got a solution for you. It's REI Call Center. REI Call Center has professionally trained and managed cold callers to help you scale your real estate business. I think they give you somewhere around like 1,500 cold calls per day. Their clients have closed around $10 million from the leads they brought in. They got close to 200 clients going right now. And they're really more than just cold callers. Yes, they have their team of professionals who are making their calls, but they have weekly trainings and Q&A calls for yourself. They have training videos. They've got Slack channels with dedicated people to make sure you're successful. They've got checklists, cheat sheets, you name it. They've got you covered to make sure you are successful in your real estate journey. Well, how does it all work? Well, step one, you're going to pull a targeted list working with them from PropStream so that you can target the certain locations that you want to start buying properties in. Second, they're going to use their Zen call platform to start calling 1,500 calls a day per cold caller. They're going to then upload all the leads into Asana. You have a view of them, and you can go attack and start buying the properties that you see that pique your interest without having to do any other work. Look, I have worked a W-2 job while building my real estate portfolio. I've been raising a family the entire time, so I haven't had time to go and cold call myself. And that's where a company like REI Call Center comes into effect to be able to take that load off your plate so that you can generate leads, close more deals, and build that portfolio. You can reach out to them at reicallcenter.com, or if you go to the show notes of this episode, you will see a link that will take you directly to it. Did you use that line of credit? Like, would you deploy it quickly and then pull it back? Or were you using it like as down payments that you were saying, hey, if we put 50 grand, let's say you got a $200,000 line of credit, and you put 50 grand as a down payment, were you okay with that line of credit, like that 50K of that line of credit being gone for an extended period of time, as long as cash flow covered whatever your payment was on that? Is that kind of your strategy?
Yeah, exactly. So we'd still use bank financing, but exactly like you said, for the down payment, we were pulling from the life insurance policy to make those. And we'd use it in other ways too. Like we went through a season where we did some flips. Mostly Mike managed the flips, but we would pull the whole amount needed for the flip out of the policy, do the flip, pay it back, so that's kind of the beauty of it, is you pay it back whenever you want. So if you want to pay it, if you do a flip and pay it back in a year, that's great. And if you want to pay it, chip away at it for years, you can do that.
That's really cool. And I imagine you guys were using LLCs, right? You're buying your properties in LLCs. So, because the reason I bring this up, go ahead. Sorry. Go ahead.
Buying them in our personal names and then quit claiming them into LLCs.
Quit claiming over. Were you having issues then with having the money season, like for the down payment, or because you were able to show, hey, this is from the whole life policy, no banks were giving you any? Because I know if you're just going straight through a commercial loan from a bank, they don't care where the down payment comes from. But I know when you go to get a loan under your personal name, you can run into, if it's a conventional loan and not a commercial loan, where did this down payment come from? So did you run into any issues there, or it was pretty smooth sailing because you were able to prove that, hey, this is coming from the whole life, no problems there?
Yeah, it was really smooth sailing. No issues. I mean, as long as you can prove, you have statements and everything that you can show, this is what my cash value is, these are the loan amount out. So we had trouble with the bank and them just not knowing what it was. So there was a little bit of explanation, but after that,
I can't argue that, right, hey, this isn't like legit money. It's coming out of a whole life policy. I have a question for me. I want you to educate me. I know I'm peppering you with a lot of questions, so you're doing fantastic. This is great. This is new to me, so I'm learning.
Great.
When you buy in your personal name and quit claim over, is there any fear of the due on sell clause? How are you protecting yourself from that?
Yeah, there's always a little bit of fear. What we do is we wait 6 months. So a lot of times, as you know, your loans will get bought out by another company. And so we feel like if we had quit claimed them before they got bought out, then we might have run into issues. But by waiting a 6-month period, the loans would have gotten sold in that period. And then they're with, whatever bank they're going to be with for the next 30 years. And so our stance is, if we're making the mortgage payments, there's really no reason the banks are going to question us. They just want their money. So yeah, I feel like there is always a fear of that. But for us, we don't think it's big enough to not do that strategy, because that's really the only way to do it. If we wanted to take advantage of like the Freddie Fannie loans and buying in your personal names, you have to buy in your personal name. But of course, we know as real estate investors, you don't want to keep property in your personal names. So it seems like the only the only path, even though there is potentially a little bit of risk. What do you do something differently, Jaron?
No, I love this strategy. I'm not questioning the way you do it. I think it's fantastic. I usually just buy straight up with a commercial loan under my LLC. And so, it's usually going to be a 20-year amortization, 20% down with a 5-year balloon, call it.
Yeah.
But I get what you're doing. It's not a terrible strategy whatsoever, because you're able to get into 30-year fixed loans, and then you can move them over, what you're saying, to an LLC through a quit claim deed, and then that should take that property out of your debt to income equation, correct? To where it's not affecting your personal debt to income ratio anymore. So you're not capped at the amount of properties you can buy.
No, not technically, because we're moving title,
But
but
you're
the
still
loan is still in
got
our personal names.
I got you. Yeah, and so that's where some folks, depending on your income, if you do that, and you don't have a high income, or you don't have other assets bringing a lot of capital in, or you don't have large whole life insurance policies or 401ks, you could get capped at the number of properties you buy, because your debt to income ratio is going to get eaten up, and so you'll have to buy under what I was talking about, commercial loans, because it doesn't affect your personal debt to income ratio. But it's not a terrible strategy whatsoever to start and gobble some properties up under your personal name with those 30-year mortgages, because you're going to be able to increase cash flow. And then if you quit claim deed over and they were to call your note, well, then you could just refinance into a commercial loan if you had to. But then you would want to make sure that the numbers were going to make sense on a 20-year mortgage, or 25 compared to 30. But lots of different ways to get this done. People, don't get confused. If you're listening to this and you're like, oh my gosh, I don't know which one to do, DM me or DM Katie. We can help you. It's not necessarily a right or wrong answer. It's just cool different strategies that other people deploy, that can be beneficial. So I love that. I absolutely love it.
It's so many options. It's just like creative financing, right? Like there's just so many different ways to buy real estate, to finance it.
Yep. My thing is this: if you can generate leads, the key is to have leads. And so if you can find a way to keep leads coming in, then figuring out a way to get the deal done, I truly mean this, is pretty easy, because money is plentiful. It is a finite resource, but it's almost like an infinite resource too, because government keeps printing so much of it. But like, people will fund your deal if you can get a good deal. Somebody, whether it's a bank, private lender, hard money lender, a whole life insurance, whoever, somebody's going to be like, bro, how can I get in on this? How can I lend to you on this? Because this is such a good deal. And so if people would stop, I feel like people focus so much on how do I get funding, and like little things like, well, how do I structure my LLC? How do I set my LLC up? What do I do in my operating agreement? Who cares? Don't worry about that. Don't even set one up.
Yep.
Start learning where you need to look for properties, the types of properties you need to look for, and how to get leads coming into your inbox. Then get it under contract. Then figure out what you're going to do. Buy it under your personal name. Quit claiming it over later, or just keep it under your personal name. Stop worrying about the things that really don't matter. Because I do calls like this with people all the time who want to come into our community and learn, and they want us to teach them. And I'm like, what are some of your biggest obstacles? Well, how do I structure my assets and set up my entities? I'm like, oh, dear God, is this really like your biggest obstacle? Like, you obviously don't know what your biggest obstacle is, because I can have that obstacle overcome for you in literally 15 minutes. So that's done. What's your next obstacle?
Yep.
What's the real one? It's crazy. It's absolutely crazy.
Yeah, it's just overcomplicating. And like you said, we realize this too. And I think it takes a little while when you're first getting in. It's all about like, how do we find capital? But then, like you said, once you're in it, it's like, oh, capital's abundant. I could have $0 and buy real estate for the rest of my life. It's the relationships that we have found that are just, it's that cliche, your network is your net worth. It's totally true. We have such a vast network now that we would never have to look for another deal again. There's just things coming in. And I think that's where a lot of new investors fall short, is they don't think about continuing to make those connections. And it's the connection you have like with your property manager. Like, have a good connection with your property manager. We've emailed some of our property managers. Hey, do you know anyone selling? She's like, oh yeah, I got 3 people. Let me connect you. And then they connect you to someone else. And it's just these very like random connections that all of a sudden you're like, whoa, I got a lot of resources around me. And so I feel like as a new investor, I wish I had understood that a little bit more and been more active in like getting those relationships instead of just like, let me get a property. Okay.
Mhm. That's such good value right there, because you said it sounds so cliche, but you have to start with networking. I would say probably the first 3 weeks to 4 weeks I work with people is me putting things in place and pushing them to go network more. Like, we'll get to the nuts and bolts of buying real estate, but I want you to be in these rooms. I want you to be having the conversations with these people, because this is where the real value is. The real value, like, we're going to learn how to analyze a property. Like we said, we're going to learn how to fund a property. We can figure out how to make the right offer on a property, but we need people, we need a team, and we need leads.
Mhm.
And you hit the nail on the head. Get out, meet people, get people in your corner. When they see a property or hear of a property for sale, you want people to think of you. It's like when people find a property for sale in Katie's market, they need to be like, oh, yeah, this would be good for Katie. I have locksmiths who call me because they hear that homes are about to go on the market. I have contractors who call me, realtors. Like, I've infiltrated everywhere, but it takes time and a little bit of effort. But man, is it worth it on the back end?
Mhm. I would say one more piece of advice in the networking realm is, if you go to meetups, it can be intimidating, right? And so I think a lot of people will go to one and it's hard. Even if you're extroverted, it's just hard to kind of walk into a room full of strangers and start up conversations. I will say, if you just continue, like, pick a couple groups or people and just continue to go, and it makes a world of difference. When we moved from California to Phoenix 3 years ago, it was like, I need some friends in Phoenix, so I found a women's real estate local meetup in Phoenix. And the first meetup I went to, it was at someone's flip they had done. And I remember walking in, and it's one of those things, like, everyone's in a conversation, and there wasn't one host to like, welcome, let me meet you. And so it was just me, like, kind of walking around. And I remember leaving like, oh man, I don't know if I want to come back. But I just went to the next one. I went to the next one. And all of a sudden, it's like, I have some really close friends in this group. So I think my advice would just be, just pick a couple groups or networking events and just keep going to really meet some people. And it makes a world of difference.
That is fantastic advice. I feel like we as adults, we're like losers. It's like when you're a kid, you just go and you become friends with everybody. Now you go and you're like, I don't really want to go. Then you get there, oh, I don't want to put effort in. Then you get home, you're like, oh, I don't know if I really like any of those people. And then you never show up again. But if you just give yourself a few more times, you're going to make friends. Too many people give up early. What's it like for you guys? Investing out of state. That's a big holdup for a lot of folks. You started in California. We're investing obviously in Charleston, South Carolina. I know you got some places in Columbia, St. Louis, I believe, all over the place.
Yep.
Um, what tips do you have for listeners on investing out of state? Because a lot of people need to do that. They live in an expensive market, but they feel like it just isn't possible.
I would say my tips would go back to kind of the networking, take the time to meet people, build a team. I'd say your property manager is, if you have a property manager, is one of the most important pieces of the puzzle, particularly with out of state. So, take the time to find some good ones. We typically now will not work with a property manager unless we know someone who has had a good experience with them. Just because, I mean, we've transitioned property managers in different markets. And if you have a bad property manager, man, your numbers suffer, your time suffers, your stress suffers. Uh, so I would say just really invest in forming those relationships. And then when you have people you can trust, you can call, you can text, you just feel so much better, and it's being taken care of. So just investing in the relationships and not just going with the first realtor, the first property manager, the first contractor you hear about, but really, uh, what's it say? Hire slowly, fire quickly,
Yeah, that's spot on. And you go in knowing that it may take some work to find those lasting relationships. It may not be the first property manager, like you said, the first contractor. Hopefully it is. If we can do a lot of due diligence on the front end, take our time, interview multiple ones, get referrals, reach out to those referrals, you're going to set yourself up for a lot less headache. But the key, in my opinion, to piggyback off of you to being successful out of state is having a team. It's all about the people around you. What they call it, the big four. You got your agent, lender, property manager, and contractors. Those are
Yep.
our big four. Now we're going to have some others that are going to come into that team, but that's where we need to focus our time. We in our community, the people that we teach, I saw that it was such like a big, I want to say roadblock. It was so prevalent. Probably 70% of the people that come in to work with us have to invest out of state.
Mm-hmm.
And so we went out and just said, you know what, we're going to build out the networks for them. And so we built out, it's about 18 different markets that we researched, interviewed. And so when people come into our world, once I feel like they're ready, I'm kind of a stickler about it. I'm like, look, you got to learn how to do real estate first. Like you need to learn how to do this. And then once I feel like, hey, you got a good grasp, then I say, all right, now let's make it really easy for you. And we can plug them in to where they have that. Because I know how important it is. And my job when somebody pays to work with me is to make them successful. And so I'm like, you know what? Let's make this as easy as possible. But what I did in those markets is the same thing that if somebody wanted to go do it themselves can do. You set up Zoom calls, interview them. If you can get on a plane, go and meet people in person, see the personality mix. Which one do you like? What are their referrals saying? And then boom, you just jot it down and you go for it. And you see how it works. You beta test, do a deal. If it works, great. Hey, let's do another one. If it doesn't, pivot, move to the next one. Man, I'm one of my Airbnbs, I think I've been through 4 different cleaners. I mean, some people would give up and just say, oh, Airbnb's not for me. No, these other 3 cleaners weren't for me. But I found the 4th one. I've had her for 2.5 years and now everything's gravy. You just got to have a little bit of perseverance and be able to overcome obstacles, solve problems, and keep it moving. And don't let little things knock you down.
Yep. 100%. And so you're basically offering like a turnkey model, right?
It's pretty close. So we do not bring the property to them. That's
Oh, I see.
we don't do. Like I don't personally present them with the property. Our partners do. So it's pretty much, it's close to turnkey, other than it just, I don't say that I bring them the property because the agents do. Will there be a day where I have a team doing all that for us? Potentially. But I think what we have now is more, I know because I see what it's doing for students. The key, like I said earlier, is generate leads. And so we teach you everything. And then we start getting the leads coming in. We've taught you how to do everything. But then as leads come in, we're helping you. We're analyzing all the deals with you, hooking you up with lenders. So it's pretty close to turnkey. I don't know if I'm feel comfortable saying it completely, but we've got pretty close.
That's so valuable. And that's kind of how we started too. The first couple of our single families in St. Louis, we bought through turnkey providers. And so it's just a really good way to like get your feet wet, know a market. And then from there, you can continue obviously to expand. But that value you can bring to your students, I mean, that's just a huge weight off their shoulders, knowing like, okay, there's some teammates that I know someone who knows, likes, and trusts them. Like that's the way to get someone in for sure.
Yeah, because like you said, you start getting a little more comfortable. Like it's all about comfort when you're starting. How do I feel comfortable doing this? And if we can knock that barrier to entry down, then it is only going to expedite. Because every deal you do, like your shoulders stand up a little taller, your chest goes out a little bit, you get a lot more confident. But we got to start somewhere.
Yep.
And so I think that's amazing. Well, Katie, this has been awesome. Where can folks find you if they want to chat with you, come into your world, all that good stuff?
Yeah. Axiom Wealth Solutions, that's our business. If anyone wants to book a call, you can book a 20-minute call with me there, or just shoot me an email, katie@axiomwealthsolutions.com.
Awesome. And for everybody listening to this, take a screenshot of you listening to it, whether it's on YouTube or podcast. Tag me on Instagram @FinanceCowboy. Tag Katie. I don't know if I have yours. What's your Instagram?
Axiom_wealth.
Axiom_wealth. Perfect. Tag us both. And we'll both tell you thank you for watching the episode today. And Katie, again, thank you so much. This was fantastic. And I appreciate you coming on the show.
Super fun, Jaron. Thanks for having me.